Down to the Hong Kong market open, and to talk a little bit more about what we can expect from the budget and the Hong Kong market, I'm joined by Derek Kowalczyk. He's Chief Investment Strategist at CFC Seymour, and he's here with me in the Hong Kong studio. Derek, do you expect the market to break through 24,000 today?
Definitely, and in fact I think we may open just above that level based on the strong performance of banks in pre-trade and on very positive sentiment in Asia this morning following gains in Wall Street last night. Also, expectations of good news from the budget, I think, will allow the Hang Seng Index to finish about 600 points up on the day.
Now, your advice to investors is to buy stocks before Bernanke's speech tonight. Can you elaborate?
That's correct. I think that Bernanke will reassure Congress about determination of the Federal Reserve to do whatever is necessary to stave off a recession. And the dovish comments from his deputy Cohn yesterday are telling me that there will be a lot of positive news in terms of how much the Fed can lower rates further. This is particularly favorable for Hong Kong due to the link between interest rates here and in the US, and in particular the property sector, I believe, should benefit the most from what Bernanke is going to say.
Now, the property sector has seen some gains in recent days. How much upside do you see? Would you be able to quantify that?
I believe that as a group, this week we can move up by about 3% more. There are two factors important here. First, the very likely property tax waiver in today's budget for the entire year is very favorable due to the upside for demand for real estate here in Hong Kong. And second, the news that I expect from Bernanke solidifying market expectations of another 100 basis points in rate cuts in the current cycle in the US are also very favorable for property stocks. So this sector should outperform this week.
Now, you speak of a link between Hong Kong and the US. How much will Hong Kong be affected with this possible US recession?
First of all, we don't think it will be a recession, just a severe slowdown, and one that will not last for too long. We expect that the impact on Asia will not be as dramatic as many people are concerned on the economy level. The financial markets, if the US stocks fall further, financial markets will be closely correlated. But as far as economy goes, we think that Hong Kong GDP growth this year will slow to 5.1 from 6.2 in 2007, which is a little bit less, but not a dramatic decline in the pace of expansion.
So how does the coming year look in terms of GDP?
Yeah, 5.1 in the coming year, 6.2 in the last year. So the slowdown will be fairly moderate, partially because we expect that Chinese economy will continue to grow in double digits, 10% this year, down from 11.4 last year, enough to allow Hong Kong to sort of piggyback on all the benefits of Chinese growth.
Thank you for your thoughts. That was Derek Kowalczyk, Chief Investment Strategist at CFC Seymour Limited in Hong Kong. Martin, back to you.
All right, thanks so much.